Hello and welcome to this week's edition of World of Business, your weekly guide to trending business news and latest developments on the stock market. We also get to cast a spotlight on unsung but thriving entrepreneurs on this show. The name is Bruce Jimbunde, and let's get straight into it. Statutory Instrument 34 of 2025, enacted in April 2025, effectively repeals Statutory Instrument 81A, eliminating penalties for businesses pricing above the official exchange rate. This follows the RBZ's February 2025 monetary policy statement, which relaxed the 5% trading margin, allowing banks and businesses alike to trade at margins aligned with international best practices. We'll look at this in detail in the second segment, but first, we give you the exchange rate as of today. The Zimbabwe gold to the US dollar interbank rate was at 26.86 ZiG. The Zimbabwe gold to the Great Britain pound interbank rate was at 35.74 ZiG. The Zimbabwe gold to the euro interbank rate was at 30.05 ZiG. The Zimbabwe gold to the South African rand interbank rate was at 0.68 ZiG. And lastly, the Zimbabwe gold to the Botswana pula interbank rate was at 1.96 ZiG. Also give you commodity prices on the global market. Commodity prices as of today were: gold per ounce traded at $3,236 after it went down by 0.36 percentage points. Silver per ounce traded at $33 after it went down by 0.30 percentage points. Copper per pound traded at $472.55 after it went up by 0.05 percentage points. Platinum per ounce traded at $1,000 after it went up by 0.86 percentage points. That's it for this first segment. World of Business takes a short break, and we'll be right back. Welcome back to the second segment of World of Business. As alluded to earlier, the enactment of Statutory Instrument 34 of 2025, enacted in April 2025, repeals Statutory Instrument 81A, eliminating penalties for businesses pricing above the official exchange rate. This follows the RBZ's February 2025 monetary policy statement, which relaxed the 5% trading margin, allowing banks and businesses to trade at margins aligned with international practices. To help us discuss this, we have with us in the studio an economist and monetary policy committee member, Mr Persistence Gwanyanya. Mr Gwanyanya, good day and welcome to the program.
Thank you for having me on the program.
It's always good to have you on the program, Mr. Gwanyanya, as we get to discuss pertinent economic issues and business issues.
Thank you.
All right, Mr. Gwanyanya, last month, government repealed Statutory Instrument 81A of 2024, replacing it with Statutory Instrument 34 of 2025, which Statutory Instrument 81A, which in essence penalized businesses for charging goods and services above the official exchange rate set by the Reserve Bank of Zimbabwe. What factors motivated this?
The statutory instrument,
Yes,
31 of 2025,
yes,
I think follows the introduction of the structured currency in April last year. It also follows the stability in the currency,
all right,
the ZiG currency, from October last year to this year.
yes,
So given a relatively stable exchange rate and pricing regime,
yes,
was supported also by the fiscal measures, that is the demand for the local currency.
all right,
I think it is necessary, it was necessary for the monetary authorities to foster competitiveness in the economy, in the spirit of a market-driven economy, which is where we're going.
All right.
So you're fostering competitiveness from the unique value proposition of businesses to be the source of competitiveness. Your efficiency, your innovation, your ability to respond to the customer needs.
All right. You talk
is
about
seen as a new source of competitiveness.
All right.
As compared to in the past, where currency speculation, arbitrage, and all sort of things around currency had now grown to become major sources of competitiveness.
Right. You talk about demand of the local currency, the Zimbabwe gold, which was launched in April 2024. Perhaps let's bring things into perspective, rather, by talking about figures. It has been experiencing increased demand as indicated by the exchange rate premium narrowing from 100% in September 2024 to 27% in April of 2025. And this coincides with the repealing of Statutory Instrument 81A and its replacement with Statutory Instrument 34. What's your take on this?
The current stability, the current demand, or ZIG demand, is a function of stability.
All right.
As I've already indicated, from October last year to date, I think 7 months plus, we've been experiencing relative stability of the ZIG. So the demand for the ZIG naturally derives from its stability. But also supporting that demand for the ZIG has been the increased drive for the ZIG by the government in terms of taxes. In the last quarter of 2024, we saw government enacting into law the measures which compels business to pay the QPDs, that is the income taxes, 50% in ZIG currency and the balance in the foreign currency.
So
that has driven demand.
We can say that the local currency has done well to date?
So the local currency is showing significant improvements in terms of the demand for the currency, in terms of stability of the currency, in terms of convertibility of the currency, and therefore in terms of its functionality as a currency.
All right. Oh, that's interesting. And to what extent do you think the Statutory Instrument 34 of 2025 allows businesses to price goods and services in line with market conditions, such as parallel market rates? And what notable improvements have been seen to this end?
The deregulation of pricing, what it has resulted into is new sources of competitiveness. Despite that pricing freedom, we have not seen the market players or businesses pricing disproportionately, but we have also seen some measure of discipline in the market, which is, in my view, takes from the measures that are in place to stabilize the currency, because you can't then just price however you want without pricing yourself out of the market. So you need to play a critical balance between driving the business and driving that business from the volatilities or the exchange rate, which is, I said, is a major transformation that is happening in the business space, where business is now being driven by unique value propositions as opposed to the past, where business was driven by current speculation and arbitrage.
And with this policy shift, speculation was that the Zimbabwe gold was going to play a very limited role in terms of transactions, with the economy remaining heavily dollarized. What's your take on this based on current market trends?
Yeah, admittedly, dollarization had grown up to be a key challenge, especially last year. but it is quite comforting to note that on account of stability and on account of improved functionality of the ZiG, we are starting to see the unwinding of dollarization as de-dollarization unravels before our eyes. We expect that with that stability, increased demand for our local currency from QPD and Ds, but also from other measures that government is going to take in place as they have promised.
Where do you think we are with respect to de-dollarization?
The last numbers that I have respect of dollarization or de-dollarization, which is the ratio of the local deposits to total deposits, and the ratio of ZiG loans to total loans, and even in relation to the total ZiG transactions relative to the total transactions. They were not looking so great. But we, with the progress that we have made in between, I'm quite hopeful, I'm quite confident that the situation is significantly improved. It is easy for you to see that. We are all looking for the ZiG in one way or the other, but we are still normalizing that, new requirement in the market. But you can agree with me that ZiG is now highly looked for a currency in the market, which inspires confidence as to the demand for the ZiG, which is also supported by the tight monetary policy stance.
All right.
Yes.
Mr. Gwanyanya, we will continue this conversation certainly after this break. World of Business takes a short break, and we'll be right back with more as we continue to discuss the enactment of Statutory Instrument 34, which effectively repeals Statutory Instrument 81A of 2024. We take a short break and we'll be right back. Welcome back to the third and final segment of World of Business as we continue our discussion with respect to Statutory Instrument 34 of 2025 enacted in April 2025, which effectively repeals Statutory Instrument 81A, eliminating penalties for businesses pricing above the official exchange rate. I'm still joined by economist and monetary policy member, Mr. Persistence Gwanyanya. Mr. Gwanyanya, let's continue our conversation, shall we? Before we took a break, we were analyzing the enactment of Statutory Instrument 34 of 2025, which effectively replaces Statutory Instrument 81A with the effect of eliminating penalties for businesses pricing above the official exchange rate. To what extent is this statutory instrument instrumental in mitigating informal sector inflation caused by operational costs?
So it is clear for everyone to see that the parallel market premiums, exchange rate premiums, have narrowed down significantly. And inflation normally follows from the parallel market premiums.
All right.
So what we have seen, what we have observed is that, including the tight monetary conditions, have created conditions of low inflation.
All right.
And even the numbers themselves, I think if from February we had some disinflation in terms of month-on-month inflation, and March I think inflation was low, below 1%.
Do you perhaps have specific figures that we can refer to?
At 0.6%, that is the month-on-month inflation, which is a more reliable statistic at the moment, the month-on-month inflation, as opposed to the year-on-year inflation, which is affected by the best effect of what happened last year.
All right.
So we had not seen the pricing madness that some analysts predicted upon the enactment of SI 34 of 2025. We had not seen that, ostensibly so, because of the judicious policy framework underpinning the structured currency, but also because of the supportive fiscal policies. So you cannot just, despite the pricing liberty, you don't have the liberty to price however, because you price yourself out of the market.
Which is quite interesting.
Yes.
So one of the implications of loosening penalties for informal economy actors is the encouragement of formalization. To date, how much of the informal sector has managed to formalize? If you have any specific figures.
Again, and admittedly, the informal sector is too worryingly huge. And the efforts that the monetary authorities as well as the fiscal authorities are taking are also seen as addressing the problem of informalization. So informalization normally thrives in an environment of instability. But as we now progress towards permanent stability, we expect also the informal sector to reduce in size relative to the formal sector as some businesses seek to formalize. It's very simple to know why the incentives for informalization are presented by the current environment. I have already indicated that due to the functionality of the structured currency, it has been able to offer convertibility, especially in the interbank market, where the currency accessibility has significantly increased. So those seeking to access foreign currency from the interbank market have got the reason to formalize, and the reason is that they have to formalize for them to be able to access the foreign currency.
Still on the informal sector, just out of curiosity, for those who have managed to formalize, how well are we doing in terms of adhering to tax regulations?
So I think we're still improving. It's work in progress. There's also quite a lot of environmental issues that policy makers have to attend to. The Ministry of Finance seems to have answered the call from the market to deal with the cost of doing business in the country. The market had complained about the cost of operating business, regulatory cost of operating business in the country.
Of some taxes.
And the minister has promised the market to address those in this coming second, or from the second.
In addition to all these that you have put on the table, do you perhaps feel there are other measures that can be done to perhaps expedite the formalization process?
So it is in respect to the cost of doing business, even our taxation regime, there may be need to relook at some of the taxes and the duties,
and perhaps
which may be a major discouraging factor to the formalization. And I'm very sure that all those are being looked at, and we should see probably some revision of the taxes and duties going forward, because the whole idea is for the market to comply in respect of payment of duties and taxes, rather than the taxes and duties that discourage compliance.
All right. Through the enactment of Statutory Instrument 34, the government's decision to drop penalties for charging above the official exchange rate has been welcomed by economists and informal actors alike. as a more pragmatic approach, what can we also hope for in the future in terms of bettering the operating environment?
So it only shows us that we are now conforming with conventional wisdom as it relates to management of economies. The price is now playing its role in the market, its rightful role in the market, where the price achieve all the economic requirements of the participants. So we have let the market dictate. We have let the market dictate competitiveness, dictate survival of business. So going forward, liberalization of the markets is in the right direction, and we see a number of economic issues aligning as the market is liberalized. We have started to see that in the market. Despite the liberalization of the pricing, we had not seen some meddiness that
was prevailing at some point.
That was prevailing at some point, pricing meddiness. But we are also seeing increased competitiveness in the market.
You talk about pricing madness, Mr. Gwanyanya. What instruments are in place to ensure that businesses are pricing above the official exchange rate do not abuse this privilege? Because I think there's a huge risk that can be. Of course, you talked about issues to do with businesses not wanting to price themselves out of the market.
Judicious, fiscal, and monetary policies. The monetary policy today is anchored around the tight monetary policy stance. The fiscal policy should be anchored around driving demand for the local currency. A combination of that would make it impossible for the business to want to abuse. Yes, there can be argument that without the watchful eye of the policymaker, some businesses, especially coming from our environment,
the businesses perhaps who have some sort of a monopoly,
have tendency to drive the market out of control. But I think the government will also be in a position to also intervene here and there to be able to manage the economy. But in the main, we expect that the market are going to be dictating and the market are going to be leading.
Mr. Gwanyanya, thank you very much for taking time out to come and have this conversation with us. We greatly appreciate that. Allow me to turn to our viewers. You have heard it for yourselves. We're talking there about the enactment of Statutory Instrument 34 of 2025, which effectively repeals Statutory Instrument 81A of 2024, with the effect of eliminating penalties for businesses which are trading above the official exchange rate. It's been a very interesting conversation here with us. My name is Bruce Chimbunde, and World of Business. We'll see you again.